Hello guys, welcome back to my channel. uh, as I said on the telegram post, I'll be posting a video about the reason behind being bullish on the Nifty. When I posted a message on telegram, I think it was this one here. I took a quick screenshot. So I sent it probably when the price was around here somewhere around 12 o'clock, and I marked this for a quick reference for you, like why I was bullish and from where I was bullish as well. So let's dig into it in more details now. Overall we knew like the market was kind of bullish. I mean, if you remember the video when I was doing the portfolio builder series, I told you that as the market is in an uptrend, it could take support from this level, and it could just turn around like this and continue its uptrend. So overall, that's what the market is doing at the moment. So when the market does what you anticipated, then obviously you should be making money out of it. That's what it is about. So you trade your perceptions, you trade your views, you trade your bias about a stock or an index or whatever it is. So that's the whole idea here. You have to have a reasoning behind having a particular bias, and then you trade it. All you have to do is find a good entry point and then manage your risk. That's the thing. So we were overall bullish actually after this huge big upside to the when yesterday it was up by around 1.8%, and there was this technical glitch as well. As if you are an intraday trader, you would have noticed that there was a technical glitch and the market was down for nearly 3-4 hours. So anyway, the overall bias was bullish, and today it gapped up and then it printed a very strong bull bar here, indicating that there is good buying momentum still in the market. And it's in an uptrend, and it's very difficult for the bears to come in stronger and then change the trend straight away. It's going to take some time. It's not going to be something like, especially if it is in an uptrend like this, it's not possible for the bears to come in like this and print this. It's very difficult. So the typical route would be, if the market is going like this, it would do something like this, go sideways for a while and then start coming down. That's the whole idea. Until we don't see that happening, we have to stay bullish in the market. And that's the reason I started portfolio builder series as well, once I saw a good retracement in the index. So yeah, back to this intraday trading strategy that I am going to explain to you now. After this, the market went sideways here, and then if you see here, when it was coming down, it wasn't that the bears didn't display that much strength. That's the overall thing I was looking at. Where the bias was bullish, and all I wanted to see was the bears showing weakness or not that much strength. Okay, so how do we identify that? Basically, I mean, if you see, this level would act as support, right? So that's what happened, and that's where the market actually got struck, and that was a good reason to believe that the market might go up again after some time. So this was a good support zone, I would say. Let me just delete that. This was a good support zone. And how do we confirm that support is being respected? If you see my telegram message, I posted like two things here. Like, it could go, I'm expecting something like this, and then it could go from here to the upside, or it could come here and go upside. Why did I mark that level? If you notice here, it's again another, there was a gap here, and sometimes what happens is this gap will be filled, so it will come here and then go up. So how do we identify whether the market is going to go up from from this point here or from this point here? Let's understand the market behavior. Okay, let me just clear off all the drawings here. See, we know this was a very good support zone, and that's the area we were focusing on. And I think I sent the message when the price was around here somewhere. Okay, So now if you observe closely, this was a decent bear leg, I would say. I wouldn't say very strong bear leg, a decent bear leg, and then a weak pullback. The bulls couldn't take it higher. You see why it came down here was basically the bulls didn't show enough strength here. Why didn't they show enough strength here? Because the proper professional bulls were waiting in this area here. Okay, that's why you didn't see much of a interest around this area, and it didn't have a decent pullback as well. That's the reason. And we didn't do anything there. Okay, to be honest, we were just watching the market. And after this, there was a nice bear leg to the downside, right? There was a nice bear leg here. But after this, as soon as it hits the support level, see how the price behaves actually. See, all we are looking for is basically, suppose this is a resistance and this is support. If price comes here, we will just observe how price behaves at this level. Is it showing strength to go upside, or is it showing weakness to go sideways or to the downside? That's all we are going to observe, right? So even in here, and the opposite is true for when it hits the support level. Is it going to go downstairs? Is it showing strength to go down, or is it going to reverse from here, or is it going to go sideways? Now if you observe closely, after this strong push to the downside, and we can see some sort of rejection already here as soon as it hits the support. That's kind of first sign. I would say I wouldn't jump into buying right there, because there was a decent push to the downside, and then this is just the first sign. And after that, it was the responsibility of the bears to take the prices lower. And as you can see, there is a clear cut weakness in the bears. They were not able to even push it to the day's low here. Okay, they were struggling. And as soon as the bulls came in and then printed a small tiny bull bar, and then again indecision bars. See, it was a responsibility of the bears to take the prices down, because they were in control when they took charge somewhere here. And now, even though bulls didn't print nice trending bars in this zone, what I'm trying to tell you is the major responsibility was on the bears to take the prices down, because they owned that leg. Okay, when they failed to do that, we saw a very nice bull bar here, and that was kind of enough second or the confirmation, basically final confirmation for us to go long. And that's how you enter here after this bull bar, and then you just ride basically. Okay, and also I told, because it was a monthly expiry, there could be some volatility as well, and that's why you should be closing your positions at the right areas. I would say this was a very good area to close. Okay, let me just clear the drawings so that you can see them properly. I would say this, because of the volatility and the expiry, I would say close somewhere around that. You still have a decent 1:2 risk to reward ratio. As soon as you get that, you just come out of it. On expiry dates, sometimes it's difficult to go for more than 1:2 risk to reward. Okay, and it's more about where the price can go, and then you just exit from there. Sometimes it could be like just 1:1.5 if you're sure about your assessment, and even though you want to close here, and if it's not 1:2, then you can still go ahead with that. Okay, so that's the idea, guys. I saw overall my bias was bullish. Okay, my bias was bullish, and I saw weakness in the bears right at the support level, and then I saw bulls coming into picture with a better momentum here, and that was enough for me to go long. Okay, I hope this video helps, guys. If you like this video, please share and give me a thumbs up, and share with your friends as well. Subscribe if you haven't done yet, and join the Telegram channel to get some live updates. And today I didn't add any to my portfolio, by the way, and if I add anything at all, I will let you know on Telegram first. Okay, thank you guys, see you soon.